Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy right now. We will be analyzing two articles, to where the first one is titled 3 No-Brainer Stocks to Buy with $1,000 Right Now. And don't worry, you don't actually need $1,000 of liquidity right now. These are just great stocks to either put on a watch list or buy right now because in my opinion and the author's opinion, they are undervalued. After that, we'll be analyzing another article regarding the 3 best stocks to buy now according to top analysts. So this specific article are what experts are buying right now. So for more videos just like this one, don't forget to go and annihilate that like button, subscribe if you are new, comment down below your favorite stock that you are buying right now, and if you think a stock market recession or crash is going to occur. And without further ado, let's dive right into today's stories. Clearly, the number one pick on this list is going to be Amazon, and if you don't already hold Amazon in your portfolio, then what are you doing? Amazon is one of the best blue chip stocks to buy right now that has explosive growth. They are already a massive company, but they still have so much potential that they have yet to grow into. Amazon is most notably known as an e-commerce giant, and an e-commerce company normally has lower margins, but with the amount of product that Amazon is moving, they still make so much money from this particular segment. Although Amazon uses their e-commerce segment more as a springboard to fuel their other ancillary segments that generate the bulk of their overall cash flows as well as their profits. Right now, we can see Amazon is trading at a huge discount right now, which means that investors should either take this as an opportunity to lower their average cost or increase their exposure to Amazon because they are not going anywhere, especially since they are rapidly innovating and increasing their overall technology regarding their Amazon Web Services, also known as AWS. This is their cloud infrastructure service segment, which is very important, leading to the bulk of their overall cash flows and profitability. Amazon's AWS is so successful that they brought in 32% of all cloud infrastructure service spending during the fourth quarter, meaning that they are absolutely dominant in this area. They compete directly with both Google and Microsoft, and of course those are also other phenomenal companies to buy, but right now Amazon is trading at such a great discount, making it undervalued and a phenomenally safe company that will give you phenomenal growth over the long term. I personally hold Amazon in my portfolio because their AWS segment and their overall growth runway is anticipated to bring in double-digit sales growth over the next few years, making this company a force to be reckoned with. The popularity of Amazon's low-margin online marketplace has also been a springboard for the success of their overall subscription services segment, which would include Amazon Prime. They have even surpassed 200 million global Prime subscribers, thus generating the company a lot of money. Amazon can also sustain their double-digit cash flow growth thanks to Amazon Web Services, and since Amazon reinvests most of its money back into itself that it generates from this cash flow, this company is not at risk of going under or out of business in the slightest. And according to recent statistics, Amazon is cheaper than it's ever been relative to Amazon's future cash flow projections. So on a cash flow basis, this is one of the best times to buy Amazon at its cheapest. So that's why I think at minimum you should add this to a watch list, or at maximum increase your exposure to this company if you already own it. Up next we have MasterCard, ticker symbol MA. MasterCard is another very stable, resilient blue chip company which is a no-brainer stock to buy. And if you're not familiar with this company, they are a credit card company that processes payments. And this would be known as a cyclical stock. And I want to make you aware that every single recession after World War II has either lasted between 2 months to 18 months, and for cyclical stocks, normally they go with the overall economy. They go down in times of recession and back up once the market cycles back to a bull market. However, what's interesting with MasterCard is that they are extremely resilient and they bounce back very quickly, meaning that if we were to enter a stock market recession or crash, this would be one of the best buying opportunities. MasterCard is currently ranked in the 2nd position in the United States in regards to credit card network purchase volume. However, I personally also like to invest into American Express and of course Visa, which is my favorite company to invest into for this particular space. MasterCard has a dominant position in their respected space because they accounted for 23.7% of the overall network purchase volume in the United States. However, internationally, MasterCard is even more fruitful. Considering cash still makes up a large percentage of overall global transactions, it gives a long growth runway for companies such as MasterCard to further infiltrate this specific market, giving them decades worth of future growth and making acquisitions which will benefit this company over the long term. Overall, this company, if it decides to trend downwards, which it actually hasn't, it's trended upwards very aggressively, which is amazing, they will rebound extremely quickly. So, of course, always make sure to keep this on a watch list or purchase this company, which is exactly what I'm doing. Up next, we have one of my all-time favorite companies, which is Berkshire Hathaway. And this is the third no-brainer stock to buy right now. Berkshire Hathaway is literally a conglomerate, and I'm going to be referring to ticker symbol BRK.B, but we will also talk about their BRK.A shares, which currently trades for $478,000 per share. Now, if this seems too high for you, their Class B shares are only trading at $315, but if that is still too expensive for you, make sure you are operating off an investment platform that gives you the ability to invest fractionally into a share or offers share slices, meaning that I could invest into Berkshire Hathaway for as little as just $1. So make sure your brokerage or whatever platform you are using allows for fractional investing or share slices. Berkshire Hathaway has literally produced an annualized return of 19.8% for their shareholders, which is absolutely insane. In other words, they have beat essentially all Wall Street experts as well as the S&P 500, making this one of the most lucrative businesses to buy, period, which is why it is very high on my overall investment list. Right now, they are trading at a relatively high valuation, and I do believe this company could pull back, but if it does pull back on any weakness, please take advantage of this company because that is what I'm going to be doing. Berkshire Hathaway in 2023 is anticipated to collect more than $6.1 billion just in dividend income, which is insane. Although the company doesn't actually pay a dividend to their investors, the company's executives are consistently buying back shares. For instance, $66 billion worth of stock has been repurchased since July of 2018, meaning that the management of this company is so confident that the company's future share price is going to be higher than the share price right now that they are buying back shares so they can later sell them in the future once the stock is worth more. So if you're looking for very stable growth, or even if you already own these companies, please look further into Berkshire Hathaway, MasterCard, as well as Amazon. But that's not all. Let's look at some more speculative companies that Wall Street experts are saying to buy right now. And to start off our list, we're going to talk about DICOM, ticker symbol DY. Top analysts and experts, as well as professionals, believe this company is a buying opportunity right now. This company is a telecommunications infrastructure and utility company that has a buy rating. For instance, they have a stock price target of $145, meaning that if you invest right now over the next 12 months, you could receive a 43.6% growth from this company if these professionals are correct, which is a huge payday. We also have Goldman Sachs, ticker symbol GS, and they are a global investment banking, security, and investment management firm, which also has a very impressive buy rating. They have a price target currently of $437, implying very stable growth of 29% over the next year, meaning that if investors are anticipating a stock market crash, you should invest into these companies which already have huge amounts of upside. Lastly, let's talk about Crescent Energy, ticker symbol CRGY, which operates an energy investment company. Their current price target and price prediction, according to experts, is $21, meaning that if you were to invest into this company right now, not only is this company a buy rating, but it's going to offer you around a 37.9% upside potential over the next 12 months. Overall, the first three companies we analyzed are very stable blue chip companies that are long-term investments, while these companies, besides Goldman Sachs, I would say are more shorter-term investments that are going to give you fantastic upside over the next 12 months instead of the next 5 to 10 years. So with that being said, I would love to hear your thoughts down below. Tell me if you already own these companies or not, and if you plan to invest into these companies more. Feel free to add any of these companies to a watch list. Remember, always make sure to do your own research. Subscribe if you are new, smash that like button if you haven't already, and I will see you in the next YT video.